It's like having cold water thrown directly in your face. However, investors should have hope for the stock market in the coming weeks and months. Inflation and rate hike worries, as well as the Omicron concern, have been put to rest, and the market has been making progress in the first weeks of February. In early January, Tesla stock was trading above $1,200, very close to its all-time high of $1,243.49. According to the market, 100 times Tesla's earnings per share is a reasonable price to pay for the company. Based on one valuation measure that appears about correct, despite being roughly 10 times more expensive than stocks of traditional automakers. Despite growing optimism among analysts, the price of Tesla stock has been unable to rise on Wall Street due to concerns over rising interest rates. Do you think Tesla stock will be as valuable as everyone predicts it will be? To find out more, stay tuned. Goldman Sachs analyst Mark Delaney upgraded Tesla stock to a buy rating and raised his price objective for the company's shares from $1,125 to $1,200 in January 2022. In addition, Delaney has selected Tesla as a 2022 favorite. He ranked Tesla shares as outperform and said the company has the best idea in the electric vehicle market. Delaney, echoing Jonas, pointed to Tesla's industry-leading electric automobiles and said that rising interest in such vehicles around the world might help the company's bottom line. Elon Musk, CEO of Tesla Incorporated, has reportedly told his staff that he agrees with the Cathie Wood-led ARC Innovation ADAS valuation of $3,000 a share, provided the company continues to perform well. In an up-to-date chat, Cathie Wood has stated that $3,000 per share is her baseline expectation for Tesla. She said that we are now more optimistic about Tesla's prospects. Their dominant position in the market is the primary factor. Therefore, instead of decreasing between the end of 2017 and now, it has increased significantly. Despite the impending deluge of all-electric cars from companies like Ford, GM, and Toyota, Cathie Wood, a well-known investor, continues to have a highly optimistic outlook on Tesla, one of her favorite firms. Wood's asking price for Tesla, on the other hand, could be viewed as excessive. To attain that goal, Tesla would need to increase its share price by more than 300% from its present level of $860. According to ARK Invest, Tesla will have shipped 5 to 10 million cars by 2025. It also claims that Tesla will offer a fully automated ride-hailing network called Tesla Network, which will generate massive profits for the company. Musk highlighted ARK's new $3,000 price target and stated that he concurs with ARK's analysis in an email to Tesla staff obtained by Electrek. Musk said that a $3,000 share price would make Tesla the most valuable company in the world, and I agree with ARK Invest that this is possible if we are able to execute flawlessly. The current market value of the automaker is approximately $730 billion, making it the most valuable automaker in the world. Musk has made numerous remarks about Tesla's stock price last year, when it was at an all-time high. Musk tweeted the news to his fans. The current price of Tesla shares is excessive. And stakeholder in Tesla has filed a lawsuit against CEO Elon Musk and the company's board, claiming that Musk's unpredictable tweets are in violation of a settlement with the U.S. Securities and Exchange Commission. The market value of Tesla dropped by more than $13 billion in September as a direct result of his comment. As Tesla's stock price increased, ARK Invest reduced its holdings by less than 0.5%. It raised around $5.76 million through the sale of 8,100 shares. But as the price of Tesla shares has fallen, Cathie Wood has been on a purchasing binge. Several of Wood's widely recognized, innovation-focused ETFs continue to include Tesla as a top investment. For instance, Tesla makes up 10.49% of the holdings in the ARK Innovation ETF, which is the company's flagship ETF. Wood also noted that the introduction of new electric vehicles by more established automakers will serve to bolster Tesla's approach. In addition, Wood has been quite optimistic about the future of the electric vehicle sector in China. The stock price of Tesla has reversed its downward trend over the past 2 days. After investment banking Piper Sandler issued a bullish report, Tesla shares increased by 3.1% as of February 14th. According to StreetInsider.com, in a show of Valentine's Day love, Piper Sandler reiterated its buy recommendation on Tesla stock and raised its price target to $1,350, indicating that new buyers of the electric car company's shares can expect to see as much as a 55% gain on their investment this year. Piper anticipates Tesla to produce more cash going forward based on updated estimates, deliveries, capex, and margins, and as a result, the company's stock is now possibly worth more. According to Adam Jonas of Morgan Stanley, the current market for EVs is a race, and Tesla is currently in the lead. He suggested that the contest be seen as a marathon. At the 21st mile, Tesla has taken the lead. Everyone else is either past the halfway point or still tying their shoes. Jonas claims that Tesla's position would strengthen as the marathon continues due to the company's recent record deliveries of its automobiles. He increased his $1,200 price estimate for the automaker's stock to $1,300 and projected 2022 deliveries of around 2 million units. Last year, Tesla delivered 936,000 vehicles, and this year they aim to boost that number by 50%. Analysts' excitement over Tesla shares has been predicated on the company's shown operational prowess during the pandemic, when traditional automakers were experiencing difficulties as semiconductor shortages and supply chain bottlenecks. To keep its manufacturing running while switching suppliers, Tesla rewrote its software. It has also expanded production by opening 2 additional factories in Austin and Berlin. Tesla's existing operations in Shanghai and Fremont, California, will be bolstered by these new buildings. Increased operational margins and economies of scale in car production are the result of these improvements. We anticipate that Tesla will eventually reinvest the increased gross margins from the inauguration of the Berlin and Austin facilities into improved customer service, a more extensive distribution network, and lower prices. The company's vehicles are already some of the greatest sellers in the world, with strong markets in the UK and Norway. In any case, Tesla has a ways to go before accomplishing such monumental goals. There are a number of problems that the company could encounter in the future, but we are confident in Elon Musk's ability to see it through. How they manage to solve these issues will be fascinating to observe. First of all, even with the government's significant incentives, like tax rebates for alternative technology, Tesla automobiles are still too expensive. The base price of a Tesla Model S is still a hefty $94,990, and that's before any rebates or other concessions are applied. Most drivers still can't afford even Tesla's latest lower-priced alternative, the Model 3, which starts at $43,990 before tax and incentives and gas savings. The cost of producing these vehicles is reflected in their high retail prices. According to Gordon Johnson, an analyst at Vertical Group, the corporation lost around $14,000 on each of the Model 3 automobiles. It did well in 2018, and those numbers could rise as the business grows. Tesla could experience a second problem if it runs out of batteries. Lack of batteries to power their goods was one of the first issues faced by Tesla executives. The battery crisis at Tesla is expected to be resolved by the completion of the company's world-famous Gigafactory in Sparks, Nevada. The projected footprint of the lithium-ion manufacturing factory is about 1.9 million square feet, and it is expected to aid in increasing yearly output to over 500,000 Tesla vehicles. It remains to be seen if the Gigafactory can be finished on schedule, as large-scale projects like it sometimes face logistical or regulatory challenges. The state of Nevada has approved the Gigafactory, which would bring in an estimated $100 billion to the state's economy over the next few decades. The number of competing electric vehicles has also expanded. Mercedes-Benz, Volkswagen, Subaru, Ford, and BMW are just few of the corporations planning to enter the electric vehicle industry in the next years. If this occurs, competition for Tesla's market share could increase. It's possible that other IT firms will also participate. Apple Incorporated is betting that it can compete with Tesla in the vehicle market, and Google has done the same. Tesla recognizes the threat posed by companies with larger current customer bases. Even though they still have a ways to go, Tesla is already light years ahead of the competition, which is wonderful news. Those who now have Tesla shares could be sitting on a substantial fortune. How much do you think Tesla stock will rise or fall in the future? Feel free to share your thoughts in the comments section.